Welcome to BuyTheDip.news. Today is May 22, 2026. Our AI model found 5 stocks today with both an article rating of buy and a metric score rating of buy, based on our fundamental and technical analysis. In this video we cover 3 of them. Here's the breakdown. The following content is for informational and educational purposes only and does not constitute financial advice. Always conduct your own research before making any investment decisions. FTAI Aviation Limited owns, acquires, and sells aviation equipment for the transportation of goods and people worldwide. Its industrial sector. Rental and leasing services. FTAI Aviation Ltd. FTAI announced successful pricing of its strategic capital vehicle's inaugural asset-backed securitization, FTAI-MRE 2026-1, backed by $612 million of notes backed by portfolio of 48 A320ceo and 737NG aircraft on lease to 23 airlines globally. The offering consists of 2 classes of investment-grade notes, with Series A notes expected to be rated ASF/A/SF by Fitch and KBRA and Series B notes rated BBB plus SF by Fitch, with the transaction expected to close on June 4, 2026. Atlas SP Partners and Deutsche Bank served as joint structuring agents and joint lead bookrunners on the transaction, with BNP Paribas, Citigroup, and PNC Capital Markets serving as joint bookrunners, Standard Chartered Bank and KeyBank Capital Markets co-managers, Gibson Dunn and Crutcher LLP serving as issuers counsel, Millbank LLP as initial purchasers counsel and McGuire Woods LLP as servicers counsel. Here are the key growth metrics for FTAI. Sales growth trailing 12 months, 47.4%, weighted at 25%. EPS growth next 5 years, 52.4%, weighted at 25%. Target price upside, 41%, weighted at 20%. Gross margin percent, 28.3%, weighted at 15%. Drawdown from 52-week high, minus 23.2%, weighted at 15%. Overall score, 79.80 out of 100. Metric rating, buy. To summarize FTAI article recommendation is buy, growth stock score is 79.80 out of 100, metric rating, buy. WDAY Workday Incorporated Technology Sector. Software application. WDAY surged 10% after reporting strong Q1 results that beat expectations, easing concerns about AI-driven demand pressure in its workplace software business. Workday posted higher sales and adjusted earnings, with revenue rising 13% to $2.54 billion and subscription revenue rising slightly above expectations, while CEO Anil Busri reaffirmed confidence in the company's core business and AI strategy. The stock had fallen about 43% this year through Thursday's close, and the company has been shifting leadership as it embeds AI deeper into payroll, human resources, and other office functions. Analysts saw the results as an encouraging first step toward a more focused AI-focused strategy and improved execution. However, the company remains vulnerable to execution and demand downturn risks tied to AI adoption and operational execution. Here are the key growth metrics for WDAY sales growth trailing 12 months, 13.6%, weighted at 25%. EPS growth next 5 years, 16.6%, weighted at 25%. Target price upside, 38.2%, weighted at 20%. Gross margin percent, 75.7%, weighted at 15%. Drawdown from 52-week high, minus 53.2%, weighted at 15%. Overall score, 72.00 out of 100. Metric rating, buy. To summarize WDAY article recommendation is buy, growth stock score is 72.00 out of 100, metric rating, buy. NVIDIA Corporation. Technology sector. Semiconductors. NVIDIA slipped lower on Friday despite posting one of its strongest earnings reports in semiconductor history with revenue up 85% year-over-year and GAAP gross margins of 74.9%, while announcing an $80 billion buyback authorization and raising dividend to $0.25 per share. Ex-Goldman Sachs partner Michael Parekh compared NVIDIA's muted stock reaction to the Apollo missions, stating that the market has already priced in NVIDIA's strong growth narrative and highlighted upcoming Vera Rubin chip rollout as a future catalyst. SpaceX filed for IPO on June 12, OpenAI filed in September, and Anthropic is expected to go public in October, leaving NVIDIA as one of the few stocks with minimal oomph due to upcoming mega IPOs. Retail sentiment on StockTwits remains extremely bullish, with extremely high levels of chatter around Jensen Huang and the NVIDIA secular growth narrative. NVIDIA has posted 18 consecutive quarters of earnings beats, reinforcing its position as the dominant semiconductor supplier. Here are the key growth metrics for NVIDIA sales growth trailing 12 months, 70.7%, weighted at 25%. EPS growth next 5 years, 44%, weighted at 25%. Target price upside, 37%, weighted at 20%. Gross margin percent, 74.2%, weighted at 15%. Drawdown from 52-week high, minus 8.7%, weighted at 15%. Overall score, 85.00 out of 100. Metric rating, buy. To summarize the article recommendation is buy, growth stock score is 85.00 out of 100, metric rating, buy. That wraps up today's 3 buy-rated stocks. There are 2 more buy-rated stocks today that you can view at BuyTheDips.news, along with full analysis for every stock. If you found this useful, please like and subscribe for daily signals. Visit BuyTheDips.news to access buy-rated stocks and full growth metrics in real time, the moment they are available rather than after market hours, along with hundreds of additional stocks that weren't rated a buy each trading day. See you next time.